Today we are going to go over the short we took on EURGBP, and we're also going to go over risk management for funded challenges. I got requested in one of my comments to do a video on it, so by all means I'll happily answer that question. But anyway, let's get into this about the short we took on EURGBP. Now, yesterday, honestly, in fact, before we talk about yesterday, today played out perfectly to how we were talking about price action yesterday. Our forecast yesterday, it played perfectly today, to be fair. So let's go from the top, as we always do. Daily time frame. From the beginning of the week, in fact, from the end of last week, I think we were talking about returning to the premium of this daily range here. As you can see, from this high to this low, talk about this fair value gap getting filled, possibly getting traded to, and then possibly seeing shorts off that. As you can see, a few days ago we tapped it, and we now are in a bit of a bearish cycle. Going down to the H4. Yesterday, I was talking about this area here, where the order block is here, as you can see, and I said if this area doesn't hold, we could possibly see a return to the fair value gap that's just up here. All right, now the reason why I chose this area here, because we had a H4 OB and the structure was looking clean for shorts, and we also had this low here to use as a target. Okay, now going into New York today, as you can see, let me get the session indicators on. We came to that level here very nicely. Okay, and as you can see, as we traded up here, London made the high of the day nicely here, and we broke structure coming to New York, and we had a nice OTE play to go short and to take out this the liquidity resting below this low and also below this low here. Right, so honestly, perfect day, perfect trading, and these are the conditions I like to see, where you can get these moves forecasted beforehand, and then when you come into the trading day, you're literally just waiting for it to happen. So off this MSB here, off this candle literally right here, we had this order block that we could have took a short from, but I wanted to see more displacement in price. So when we came down here, and if you notice, we had this massive wick. Probably the M5 is a better time frame to look at this on. As we broke down the area I was looking at for shorts, then we're going on a clean pair. The range I was looking at to take shorts from was from here. Let me get rid of this. Hold on. Was from this range literally here. So we had a nice M5 structure here to go short of there. Notice how structure is so clean here. All right, now I was looking at this area here originally to take shorts from, but what I noticed is price might not hold on. I think the PA is a bit different on these two. I think it's a tad different. Hold on, let me just double check. Yeah, so anyway, I was looking at taking shorts from here, but then what I noticed is we had tapped it just here. Now at this point where literally this candle here, let me put the replay to 1. At this point when we made this candle, I honestly thought I missed a trade. So what I did do is I extended my limit a bit, literally just down to around this level here, because in all honesty, I didn't want to lose the trade. I didn't want to miss the trade, and because I'm so confident in shorts, considering our forecast hit so accurately, I didn't mind just moving my limit down a bit lower. And as you can see, price came back up, tapped it here, and we went lower. We went short for the day to hit just over 2%. When we did take out this low here and we were around this level in price, I took 70% off and I left around 30% on to run, and then we had a little bit more of a runner, not too much, but enough to take us below the low that we were looking at just here. Okay, so that was my short on EURGBP. So remember, let me go back onto the EURGBP here. We tapped our H4 level, our H4 resistance. We then broke down on the M15 when we took out this low. We were downtrending on the lower time frames, and this is where I wanted to get in on the downtrend. I didn't manage to get in from this level because As I said, I want to see more of a displacement, but when we had that nice displacement here, we got in here, and even on my Insta story you would have seen I tried to set limit somewhere around here, up here, but it didn't get tagged. I honestly thought I missed it. I was a bit upset, but we managed to get back in here and managed to get just over 2R. So again, can't complain, happy days. I will insert a screenshot of my prediction yesterday, and I'll also insert a screenshot of the MT4 as well, so you guys can see that as well. But that was UGBP. Nice, clean, simple stuff, nothing too complicated, you know. It's just simple stuff. This week we've ended the week just over 5R. Really and truly, my target for the week is like 2 to 3R, so 5R, can't complain with that. I'm very, very happy with that. We go again next week. Now, going into risk management for funded challenges. Now, it's very important you take notes in this, guys, and I want people to actually really understand what I'm saying. I was watching the ICT video where he was talking about risk management for normal accounts, and he was saying how the best way to, you can't ever avoid drawdown, essentially. Yeah, you can't ever avoid drawdown, but drawdown always starts, or drawdown or losing streak, whatever you want to call it, it always starts with one losing trade. Yeah, a losing streak always starts off with one losing trade. As soon as you lose that one trade, your psychology, it's going to take a hit in a sense. Then you might be tempted to revenge trade. You might have a revenge trade without even realizing you're revenge trading. You might just want to go back into the markets. So the key thing is to flatline your drawdown. The way you flatline your drawdown is by reducing your risk. So, for example, let's say I risk 1% on an account. Okay, so I'm risking 1% on an account. Okay, as soon as I take a loss on the funded challenge, risking 1%, my risk go down to 0.5%. Sorry, 0.5. Why is it in that? 0.5%. As soon as I lose, I continue risking 0.5% until I win a trade, and until I make my profit back from that minus 1% loss we took before. So if I win, I'll go back to plus 1%. Okay, now let's say I was to lose again, I'd go down to 0.5. Okay, now the reason why you do this is because you want to flatline your drawdown. You want to get back into your swing of things. Okay, when you take a loss, as I said, you're going to take a hit in your psychology. Now let's say you were to go revenge trade, but you still kept consistent risk, you still kept that 1% risk going, you're going to just increase your drawdown a lot. It's better just to take that 1% loss, drop down to 0.5%, half your risk, go back in the markets, and if you do lose, you ain't lost 1%, you lost 0.5%, which is going to be a massive, not I wouldn't say benefit, but you're just managing your drawdown. Do you know what I mean? The drawdown curve, when you have your equity curve, you don't want it to have sharp ups and sharp downs. You want it to be a smooth line, and by halving your risk to 0.5% when you just taking 1% loss will help smooth out that equity curve. Okay, so what you can also do is, if you notice you took another loss of 0.5%, you can reduce it to 0.25. okay, now some people are going to look at this and be like, well, hold on a minute, if I'm always reducing risk, how am I going to complete the challenge? What if I don't get the 8% for, let's say it's my first fund, the 10% for FTMO? And I think you're looking at it the wrong way. Your goal is to be profitable. Forget the challenge for a sec. One issue people have with challenge is you're putting it on a pedestal. Forget the challenge for a second. Just break even. Okay, if you started off, let's say, with a 20k account or 100k account, let's say 100k account with FTMO, taking a 1% loss, you've now lost 1,000. You're now down to 99,000 in the account. You keep on losing. Before you know it, you're down to 92,000 in the account. Think about how far you have to reach to get back to that break even. You've now lost your account, and you now have to buy another challenge, or you have to wait a bit for you to get the money to buy another challenge, because they're not cheap. How about you take that 1% loss? Okay, cool, breathe, it's the start of the month, relax, it's fine. You still got another 28 days to take another trade. Okay, drop your loss to 0.5%. For you to then get down to that 92,000 risking 0.5%, you'd have to do double the amount of trades. How about you let the losing streak pass before you like start risking your normal amount? And this is another thing. Like, people forget that when you are break even, you get a free retake. Not every month are you gonna get those trades coming frequently. Not every month you're gonna have winning streaks. You're gonna have months where you might win 1 or 2 trades, and you might lose 3 or 4 that month. But your risk to reward is what will get you out of the mud. Okay, stop thinking that you need to smash every challenge that month, that week, that day. You've got a whole month. You've got 28 days, almost 30 days, sorry, to do it. And with some of the challenges now, even if you're in profit, they'll give you an extension of at least another 2 weeks or a week. You don't need to win the challenge there and then. So when you look at these risk parameters here, and you're thinking, cool, if I drop my 1% down to 0.5%, I'm not gonna make enough profit to win the challenge. Forget that, man. Just get to break even. If you're already in drawdown, what's the point of getting in more drawdown when you can just get in break even? You go again next month. Mental capital, guys, man. Isn't it better to know you have the account there for next month, review your trades that month, and you still have the account there? Do you know what I mean? Like, flatline your drawdown. It's not about winning every single challenge. It's unrealistic. It's not a representation of the real trading world. Okay, so, like, when you lose a trade, okay, just drop your risk a bit. Because another thing you'll notice is if you lose a 1% trade, you might even have fear of entering the next trade because you're scared of losing. By you dropping your risk, you're kind of eliminating. You could never eliminate fear 100%, but you're kind of getting rid of 70 to 80% of that fear of entering you're going to have. You know what I mean? Because you know you're not putting as much on the line. And if you do lose again, you lose 2 trades, you've only lost 1.5% on your account. One 0.5% trade with a 3R risk to reward ratio would get you back to break even on that account. Then you can go back to 1%. Okay, now you don't need to rush these challenges. Just treat it like it's your account. You know what I mean? And then when you get that good month where you've got on a win streak and you've completed the challenge, you've done it. But stop trying to do it then and there and now. Like, it's not necessary. Just take time and do it how you need to do it. So to answer the question about risk management for funded challenges, this is what I do. If I start off on a 100k account, okay, for example 20k, whatever it is, the account size doesn't matter, the principle stays the same. Yeah, 1% risk. We can even start with 0.5% risk till you win, but let's just say you started off with 1% risk. Let's say you lose the first trade you take in that account, you drop your risk to 0.5%, you flatline your drawdown. If you lose again, drop your risk to 0.25% until you make a winning trade. When you make that winning trade, you then up it back to 1% or 0.5%. Do you get what I'm saying? Flatline the drawdown. Stop letting these losing streaks consume you, because as soon as you lose 3 trades in a row, you lost 3%, and you can only lose 10% in an account, that's the max drawdown. Your psychology will hit you. You'll start rushing into trades, you'll start taking bad trades, you will start forcing entries, you'll start missing trades because you're scared. And that's where you go in a downward spiral of knowing you have a plan that works but not being able to execute it accurately. And all it comes down to is execution. And the one way you can execute accurately consistently is by making sure your thinking and your state of mind is in a sound place. And the only way to make sure it's in a sound place is to make sure you are risking accurately and not rushing things in these markets. But as I said, I hope that answers your question. But that's all for me today. As I said, I will post a video, a screenshots of the trades and the forecast last night